military as VUCA. And nothing, I mean, the recent development in our world between the Russians and the Ukrainians and the rest of NATO and the rest of the world. These are all indications of the challenges in which we face in a changing world. So we are going to, as usual, we want to please ensure that you can post your questions ahead, or you can post the questions as we go, as well as comments. Mute your microphone as well as visual, so that we can have a very seamless interaction. We're going to have a Q&A session after the presentation of our distinguished guest speaker. We think it's highly privileged because our speaker will be discussing a topic that is very, 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 very relevant and very timely. Investment opportunity from fiscal profligacy. I mean, what a topic! What a topic! And let me just give a little summary, if you like, of the gentleman that we have as a great privilege who will be speaking to this all-important conversation this afternoon. It's afternoon in Lagos, Nigeria. It may be morning from wherever you're joining us. All the same, once again, welcome. Mr. Kola Ayeye is a seasoned professional with over 30 years experience in banking, financial services, audit, and advisory services. And he once was on the board of GDL, that is his company. He served as executive director of Asset Management Corporation of Nigeria, AMCON, with responsibility for recoveries and resolutions, a role central to the corporation's mandate of recovering bad loans and bad loans acquired from bad banks. In addition to significantly improving recoveries through various initiatives, his team made significant contribution to the restructure and deployment of major assets and entities in the aviation and oil services sector. Prior to that, he was appointed by the banking regulators, that is the central bank, to the board of Main Street Bank. Main Street Bank, one of those three banks acquired by the regulators in 2011, consequence to solvency and liquidity problems. The board and management succeeded in its mandate to turn the bank around and sell it to a new owner. Much earlier, he was a new member of the team that recapitalized and turned around National Bank of Nigeria. I mean, those of us who are old enough to know National Bank, and honestly, that's not to look down on anybody. It's just a matter of history that this used to be, one of the very, very iconic banks in Nigeria. Either though deemed terminally and irredeemably distressed. He joined the bank as general manager after his recapitalization in 2000, and he became the chief executive in 2003. He resigned in the course of the merger of the bank with two other banks as part of the consolidation of the Nigerian banking industry. In 2014 precisely. 2014 is significant because I think, of course, historians will tell us that a lot started before 2014, but 2014 was a watershed between Ukraine and the Russians. We hope we'll be able to say a couple of things on that. In 2014, Mr. Ayeye arranged the recapitalization of Express Discount Asset Management, EDAM, and led the recommencement of business with a new strategic direction before his appointment to the board of AMCON by the President of the Federal Republic of Nigeria in 2015. He returned in February 2018 to serve as Group Managing Director, Chief Executive of GDL, formerly EDAM, to champion delivery of our intent to strengthen and expand the middle class. Kola Ayeye is a chartered accountant with a first degree in accountancy and a master's degree in finance. He's an alumnus of the Lagos Business School, Institute of Management Development, Lausanne, Switzerland, and Harvard Business School. He is committed to the highest ethical standards and brings a network of skills, contacts, and resources to GDL. Ladies and gentlemen, it's my honor and pleasure to welcome our distinguished speaker and presenter at Touchstone Business Sustainability Series 68, Mr. Kola Ayeye. We're so excited to have you. And one of the things I'll be asking, maybe we'll start up front, is to start saying we were discussing this for quite some time, and that was before the invasion of Russia, if you call it invasion. Some people may have a different opinion. Before the invasion of Russia into Ukraine, I'm just wondering how this will impact on your presentation. Anyway, we welcome you, and I think you can dive into the presentation while we have all our top comments as well as questions put in the chat room. If we have the opportunity, we might have an opportunity of interventions, voice intervention from our esteemed participants. Once again, this is BSS Series 18, and our distinguished guest and speaker is Mr. Kola Ayeye. Welcome.
Good afternoon, Mr. Tunde Ojo, and it's a great honor and pleasure to be at the Touchstone Forum. I've known you for almost 3 decades now, almost in my entire working life.
Okay.
And I must commend your courage and the persistence with which you've built Touchstone. I tell people that Nigeria can be an entrepreneur's graveyard. So remaining on your feet, just staying on your feet, keeping a business alive for 20 years is an accomplishment, much less keeping it alive and well. So I do honestly and sincerely commend you for the work that Touchstone is doing and for the diligence that you're putting into the sustainability series.
Thank you.
We don't have time, but anytime I'm at a forum to speak, and my big brother, Mr. Kehinde Lawansin, is on the forum, it is incumbent on me to acknowledge and recognize him. He's someone that played a major role in my growth. He was my mentor from my first year in university, and that situation has continued up until now. So Mr. Lawansin and Professor Kehinde Lawansin, it's wonderful to have you on the forum, and I want to acknowledge everybody.
Thank you.
Thank you very much. I will go quickly into the presentation because I've been given a very, very challenging task of going through a number of slides in 30, 35 minutes. I guess I can share my slides.
Yes.
Okay.
You can. I mean, if you feel constrained by time, you can make it 40 minutes. So,
okay, thank you. The host needs to give me the right to share. I think I need to be made a co-host so I can share. I've tried to share and I say okay, thank you very much. Right. Okay. I hope you can see my screen.
Yes.
Okay. So we're talking about the investment imperatives of fiscal profligacy in Nigeria. You know, the topic is the same, just a play on words. I will go through this quickly in this outline. Just a word on investment. We won't waste time on that. Then the government performance.
Just a moment, just to interrupt you.
Yes.
Can you put your slides in presentation mode?
No problem.
So that
right.
Yeah.
Okay.
Thank you.
All right. So what is investment? Government performance scorecard. Here, just 1 or 2 slides to show us that it's not an insult or a political statement to say government has been profligate. And then to see the symptoms of that profligacy, what are its investment implications? And then quickly look at 6 investment options, and we'll round up from there. So investment is dedication of an asset to attain an increase in value over time. Please take note of that. The purpose of investment is that what you put into an investment, you expect its value to increase. So what you could consume, when you defer gratification and you invest, it is because you want a return on that investment much better than it would have been had you consumed it. You know, so the purpose of investing is to generate a return. Now, when you have an economy that is suffering from poor management and high inflation, sometimes you can have returns on investment that practically appear as though you would have been better off if you consumed. Now, that's not a discouragement to investment. It's just to indicate that when an environment is an environment such as we have in Nigeria, then investment needs to be discerning and properly managed. Otherwise, you could run very hard just to remain on the same spot. Or the Warsaw. Now, talking about what has happened to our government, what is the scorecard of our government? Now, this slide talks about the budget of government. And you can see that from 2015 to 2020, government budget has grown from 5 trillion to 10.5 trillion. That in itself is extremely audacious. And if it is not achieved, it can be irresponsible for a government whose revenues are not growing. So government has sought to double its budget over a 5-year period, 6-year period. But you will see that while budget has been budgeted expenditure has been 5 billion, revenues are 3.2 billion. So we've had a situation of always budgeting for deficits. And so the budgeted deficits from 2015 to 2020 has been growing. That is, even the intent of government is that if it achieved all of its budget, it will have significant deficits. So in 2015, you have a budgeted deficit of 1.5 trillion that goes to 3.3 trillion to 3 trillion, 2020, 5.7 trillion. So this shows us a picture of significant deficits as a percentage of budget. 31% of budget as projected deficit is huge. And so you have to 2020 where you have a 54%. And let me just make a note on this line. It is almost literally impossible not to have high inflation if you have a situation where government is incurring these kinds of deficits. The only times these kinds of deficits would be non-inflationary is if significant foreign investment is coming into the economy that more than offsets the amount of borrowing that the government is undertaking. And that has not been the case. 54% is huge. So you can see that inflation has literally been double digits. And these are official inflation rates: 9%, 16%, 16.5, 12.1, 11.4, 15.75. And once you start to have those kind of inflation, you also start to see the devaluation of the currency. As you can see, from 216 to 394.5. But this 2015 to 2020 picture does not even give you the complete picture. This slide, I want to acknowledge Mr. Ayo Teriba of Economic Associates. You know, the budget figures does not tell the entire story, because the actual story is worse than budget. What has been happening for years is that government budgets very audacious increases in revenue, which it never achieves. And based on those audacious increases in revenue, it also budgets very significant increases in expenditure, which it almost always achieves. So budget is usually lagging revenue substantially. Expense is close to budget. So you keep having a boomerang of deficit. So look at 2021, for example. This figure from Economic Associates shows what the figure is, what the performance of the budget was as at November. So you had a government that budgeted to spend 14.57 trillion, recurrent of 9 trillion, and capital of 4.9 trillion. And it budgeted to have revenues of 8 trillion with a deficit of 6 trillion. Let me say this, in my view, and I say again, not for political reasons. It's hard for me to contemplate why a government that budgets to earn 8 trillion, should budget a deficit of 6.5 trillion. To budget more than 75% of your revenues as deficit, it is simply put, in my view, it's profligate. You would rather it was better to create a model where this 6 trillion was carried by the private sector as investment. I mean, direct foreign investment, local investments to do this expenditure. So you start to see a situation where debt service is becoming unsustainable. look at non-debt recurrent expenditure of 5.77 trillion. When you are spending almost 6 trillion out of 8 trillion you earn to service debt, it is not sustainable. You cannot spend 3/4 of your revenue on debt service. It is simply unsustainable. So that is why we are saying this is a picture of profligacy, and that is the budget. Now you go to actual. While that was a plan, you spent 12.56 up to November. You had almost met your entire spending budget, but your revenue was 5.5 trillion out of an 8.1 trillion budget. So for 11 months, you had already incurred 7 trillion deficit. Your deficit was already more than your revenue. There is no gainsaying that this kind of picture just means there will be high inflation, and there will be pressure on exchange rate. Of an import-dependent economy, it is a self-reinforcing adverse scenario. As long as you are import-dependent, you have inflation. With high inflation and deficit spending, you put pressure on the exchange rate. Because you are import-dependent, the more your currency devalues, the more impossible it is for you to control inflation, because you are importing things. And so once your currency is devaluing, inflation will go up. If something that used to cost, it's just something that used to cost $1 5 years ago at 160. If you import it today, it's 500 or 570, even if there has been no inflation in the dollar. This is a picture of profligacy. No one should put their signature to these kinds of plans that says that almost 80% of revenues will be incurred as deficits, and that debts, we have allowed our debt to grow to such an overhang that almost 80% of our revenues is being used for debt service. It's this picture that is a picture that we say it's profligate. Inflation is going to remain high, until we find a way to crash our debts, bring government expenditure in line with revenues, and create an environment that is attractive to both foreign investors and local investors. Until we do that, it is a profile of investment profligacy. So what do these things say? There is waste. We had always been expecting a government that will curb waste and corruption. There has been a near 100% absence of sincere effort to eliminate waste and corruption. We have a situation where there was in the lockdown year, 7, 8, 9 months, people were not in the office. Yet we were not told that there was substantial report of surpluses on government overheads. So who was spending the overhead if people were not in their office? There has been many, to use the words of my big brother, Mr. Lansing, scamdemics, all manners of scams. So there is waste. There is unsustainable government borrowing and deficit. I've spoken to that. There is high inflation and there is naira devaluation. This can characterize the fiscal environment that we have. And even if we have a new government that is going to be prudent, they have a huge challenge because they are going to inherit an unsustainable level of debt that needs to be dealt with. It does seem as if this is hanging. Okay. So what are the investment implications of this? Just looking at what this means for investment. So I want us to quickly look at loss arising from investing in Nigeria risk-free assets 10 years ago. Average inflation rate in the last 10 years is 12.5%. The average yield on 10-year bonds has been 10.5%. So if someone invested 1 million 10 years ago, the exchange rate then was 156.3. So by investing 1 million naira 10 years ago, the person invested the equivalent of $6,398. By earning 10.5% on that bond for a period of 10 years, the proceeds of that 1 million naira will be 2.714 million. I've decided not to use 578 or 580. I've decided to use the average of the artificial 416 and that 578 to use 497. So the value of that 1 million after that 10 years at that rate of 597 comes to 5,461. So 10 years ago, somebody who started with $6,398 will end with $5,461. The person will have lost 17% of the dollar value of that investment. Some people will say the official exchange rate is 416. And if you use the official exchange rate of 416, I don't know how many people get money at that official exchange rate. That value of 1 million 10 years after is $6,524, which is a gain of 2%. First of all, I don't think people should reckon with that 416 as a realistic rate. But there is something else. This picture is just a picture of nominal returns. The dollar also has an inflation rate over a 10-year period of 2.47%. So the conclusion of this slide is that every naira invested in bonds 10 years ago has lost 17% of its nominal dollar value. But after adjusting for US 10-year inflation, that 2.47% over 10 years is 28%. It means that the aggregate loss in purchasing power is 45%. It's important for that to sink in. And this is real. There are some of us have monies in PFAs, and PFAs carry 10-year bonds, 15-year bonds, 20-year bonds. The part of our pensions that are invested in those bonds 10 years down the line has lost 45% of its purchasing power, at least in dollar terms. I wonder why this is okay. So based on this kind of picture, it's also important to now have a sense that in order to defend the dollar value of that 1 naira invested 10 years ago, just by inverting the calculation, the computation to say, okay, what kind of rate of return do I need to achieve annually so that my 1 naira 10 years ago will achieve the same purchasing power in dollar terms? The implied rate that you need to earn is 15.04%. Because of time, I won't go through the details of that computation, but it's similar to the last the last slide that we saw. You know, that is the kind of rate of return that we need. So I want to quickly look at 6 investment options that we should have in mind in this kind of scenario. 6 investment options. Option number 1 is I want us to see that what this picture means is that it is reckless not to invest. However, when you have a situation where there is this continuous inflation, there's continuous devaluation, it takes a lot of effort and professional guidance, even just to remain on the same spot. I want you to note that what 15% is saying is not saying that the purchasing power of your investment is growing. It's just saying that you're succeeding in defending it. It means that the returns will need to be north of that in order for the purchasing power to be growing. So I want us to look quickly at 6 investment options. And what are these investment options? Number 1 is mutual funds. And under mutual funds, we should look at 3 kinds of mutual funds: balanced funds, equity funds, and money market funds. Then when you reach a certain threshold, you can have a managed portfolio. The 4th thing I want us to look at is the importance of currency diversification, which I believe should be obvious from the kind of things that Naira is going through. The 4th option is real estate. The 5th is what I call middle class solution. And the 6th is what I call 2023, 2027, 2031. Now, talking about mutual funds, you know, mutual funds pool is funds pulled from a variety of investors under professional management. And typically, to manage a mutual fund that advertises to the public for investors, you will need to have been registered or licensed by the Securities and Exchange Commission. Otherwise, you will be ultra-virus the law. Now, in times of inflation, a balanced fund has an appeal because it holds a mix of assets. A balanced fund will have equities, government bonds, corporate bonds, sometimes real estate, and you will have money market instruments. Money market instruments will include treasury bills, short-term debt notes issued by companies called commercial papers, and bank deposits. Now, and this, I must say, this is not a recommendation for any investment. The thing about once you have inflation and devaluation, keeping your long-term savings in instruments that are solely money market will rarely defend you against inflation and loss of value. It's in order to defend value, you need to look at what portion of your income and assets are available for long term and how to manage that to defend value. Balanced funds in that regard stand some chance, some better chance of defending against inflation. Now, it's important that we are looking at this not only on an annual basis, but over a long period. You are looking at money that you are able to live for 5 to 10 years. These are long-term savings or even more. And so you have, because different markets at different times have different temperaments. They can go up, they can go down, but there are instruments who you need to have instruments who over time will earn a return and which to some degree could defend the value. Where I work, we have a balance fund, which for year to date has done 5.85%. Over 1 year has done 20%. The thing about this is that this is not an advertisement for a fund. This is not an indication that this is a fund you should invest in, because one thing in investment is that last year is not necessarily a pointer of what will happen this year. Now, equity funds strictly invest in equities. Now, as a crude measure, the Nigerian Stock Exchange market capitalization grew from 6.54 trillion to 32.3 trillion over the last 10 years, which is an annual growth rate of 13.5%. Now, if you just observe that this 13.05% is an average, it has both the strengths and weaknesses of the law of averages. That average of 13.05% will show you that there are stocks that over that period did 5%, but there are some that did 30 or 40 or 25%. That already gives you an indication that a well-selected basket of equities is one way, to achieve growth. The last is money market funds. Money market funds invest solely in money market instruments. Again, saying that this is not a recommendation of a particular fund, the money market fund which you manage in DDL has done an annualized yield of 6.5%. Typically, what I would say to you is that mutual funds give you the advantage of having your long-term savings under professional management. I would say it is important that part of your portfolio that is either savings accounts or bank deposits is what you should compare with money market funds. If there are money market funds giving returns above what you are getting on your deposit, you should move some of what you have, a large part of what you have in deposits to money market funds. But a significant part of your long-term savings should be, if they're going to be in mutual funds, they should be in balanced funds and equity funds, which can defend you against inflation. And you'll be sure that you can get professional advice on the timing of entry and that the funds are going to be available for a long period. Otherwise, if you enter at a time when the market is at peak and you need liquidity, you want to get out when the market is at the trough, you can suffer losses. But with proper guidance and with savings available over time, this is an option, mutual funds. Now, the next page is on managed portfolio. Once you meet some minimum thresholds, for some professional managers, it's 10 million. For some, it's 50 million. For some, the figure is in dollars. You can say, I don't want my funds in the mutual fund that is managed for everybody. I want you to manage a portfolio for me. Now, in the context of what is going on in Nigeria now, I've put a comment in red that you should tell your manager that my objective is to beat inflation, but you should not insist on it. Any manager that comes to you to boast that they will beat inflation, they are likely going to be undertaking speculative investments. It's important to preserve capital, not in the quest for growth to lose it. Again, I say that if you have a managed portfolio, you should your conversation with your wealth manager should be, okay, so what returns are we achieving or have we achieved? How does it compare with certain indexes, like the equity index, and how does it compare with inflation? You say, in order for my wealth to grow, we must beat inflation. So it's a guide, but it shouldn't, the framework should not be something that now leads to losses. Now, then the advantages of currency diversification, the third thing is that you need to achieve currency diversification. On a platform like this, I can't talk to you about where you find dollars because we like to bury our heads in the sand in Nigeria and live a life of pretense. But, some of your long-term savings you should seek to find means of diversifying from the Naira a little or some. The advantages of currency diversification is that somebody for whom some of their savings were in dollars 5 years ago, even if, as long as they didn't lose a penny, that dollar is worth 570 today. Options for investment. There are funds that invest in Eurobonds. Eurobonds are securities issued by the Nigerian government and some Nigerian corporates, and also some African corporates in dollars. There are also exchange-traded funds. For example, Goldman Sachs says that the average 10-year stock market return is 9.2%. You see, if you don't have, a lot of us don't have visibility or the sophistication to pick foreign stocks. So we can just invest in a stock, in a fund that is proportionately invested in every equity in that market. So that way you're just taking an average of a market risk. So you're saying, see, I'm not sophisticated. I don't want sophistication. If I earn what the market earns over the long term, I will be okay. And the average 10-year stock market return is 9.2. The S&P 500 index, has done 13.6%. Now, these are foreign currency returns. And just as for Naira, you can move away from mutual funds. If you also have sufficient resources, you can have professionally managed portfolio in foreign currency. I hope I'm being followed. Now, just talking about currency diversification, these are some of Nigerian par bonds issued by the Nigerian government, that are in dollars. The principal is in dollars, the interest is paid in dollars. Now, the important thing is this column on yield, that if you bought today, what is the annual rate of return that you will achieve if you hold it to maturity? These things also need guidance for you to know when to buy and when to sell, because that price moves, So the reason why 2022 will be low is because it's close to maturity. So you see that there are some bonds, that Nigeria government issued, due in 2030 that will be earning almost 8%, 7.89%. That will be your annualized rate of return in foreign currency. If you consider the fact that the dollar has inflation of 2.47% and you are earning 8.6%, 7.8%, 7.35% in dollars, that shows you how much value you are now creating by having some of your long-term savings in this kind of assets. Now, these are corporate bonds. Nigerian banks issue, these are issued by Nigerian banks. I just noticed that Access Bank has something that is called a perpetual bond. That means maybe it's a bond that they will never redeem. And these are the yields, 10.10%, Access Bank, another Access Bank due 2026, 6.5. This is EcoBank, 8.06, another EcoBank, 7.3, and you can see Zenith, 6.5. Those are dollar returns, which you get for investing in this instrument, but you must invest dollars. Now you can see that the Ghana is in a situation of fiscal imbalance. What the market is saying, if you see the kind of yields that the market is demanding for Ghana securities, as high as 16%, in instances, 16, 16, 16, 16, 16, 15, 10, 14. What it means that the market is saying that in the short term, Ghana is a high-risk bond. They are saying, are we sure there won't be default? However, these are the yields on Ghana sovereign instruments. Angola is an oil-producing country, and you can see the yields on Angola bonds of anywhere between 6.5 and 9.3%. Just to say that one needs to contemplate if one can find the foreign currency resources to put some of one's long-term assets in foreign currency to defend against the profligacy that is going on. 10-year bond yields, this is just information. You know, Nigeria is 12.2, Angola is 9.5, Gabon is 6.3, South Africa is 9.5. In my opinion, the best managed sub-Saharan African country, Botswana, is 6.75%. The other thing is we need some understanding of how the real estate investment market works. And I want to acknowledge Messrs. Benga Olaniyan and Co. and Estate Links. And let me blow their trumpet. I will encourage Mr. Tunde Ojo, if you want a session on understanding real estate investment, I think you should ask Mr. Benga Olaniyan to come. He's someone who approaches real estate from an investment point of view, not just from buying and selling or letting, you know. So all the slides, the 3 slides which I'm showing us under real estate is an adaptation of information I obtained from Benga Olaniyan and Co. These are rental trends in dollars. These rental trends look at both commercial property and rental property. It took three commercial properties in Lagos. Owando Towers, you can see from 2015 to date, rentals for highbrow commercial property is under pressure. From $1,000 per square meter, it has moved to $600. Pre-COVID, 800, 600. Same thing with Heritage Place, 100, 1,000, 800, 600. And there is a building, because I'm not sure which building it is. I think it's a building on Kingsway Road, $300, $200, $100. The picture you get is that premium commercial rents is heading south, is under pressure. Now, residential property, high-end 3-bed luxury flat in Temple Road. This particular flat was 16 million in 2015 annual rent. It's fallen to 12 million pre-COVID. It has remained at pre-COVID levels. But you now see that middle income and lower income people are having a rough time, because mid-level bungalow in Surulere has moved from 3 million to 4 million. You know, that's a 33.1% growth in rent. Low-end basic 2-bed flat in Ogba has moved from 500,000 to 550 to 750, 250. That is a 50% growth over 6 years in rent in Ogba. What that is saying to you is that if your objective is rental income, the trend in the last 6 to 7 years seems to say that properties in the mainland are generating rental yields, you know, are improving their rental yields much faster than on the island. Again, I say that I got all of this data from Mr. From Benga Olaniyan and Co. Now, what has happened to prices? How does real estate defend against inflation? In these statistics that they are providing for us, they provided us 3 investments in 3 properties. Very early on in Dolphin Estate, 675 square meters of land in BGC and 675 square meters of land in Abidjan. And what you see is that that land was 1 million in 1993, which was $45,500. By 2000, it was 4.5 million, which was, it has reduced to 42,800. But by 2021, at 140 million, is now $280,000. Clearly more than defending its value of $45,500. The VGC land in 2000 was $17,000 or 1.8 million naira. Today, it is 80 million naira or $160,000. 675 square meters of land in Abidjan, 50,000 in 1993, $2,700. Today, it is 15 million. It is $30,000. Now, on the face of it, this will say to us that real estate is a good lock in value, but don't be hasty. I will give one important proviso shortly. But you will see also looking at returns, ROI on development. We have this comparison of a development of an office block in BI for rent and a residential property in Shangotedo for sale. land, construction cost, total cost, sales proceeds, and the net income, you start to see that rental income, comparing if it was done in 2008 than 2021 and 2012 for 2022, you see that on the office block in VI for rental income, in 2008, it was 27.3%. It has reduced to 8.7%. Just showing again, confirming what we saw, that the rate of increase in rent on the island is not keeping pace with the rate of increases in costs. So development costs are rising much faster than rents are rising. That's what the picture says. For sale, it says that on this type of property in Shogotedo, it was 55% return on investment at completion, in 2012. It will be at 30% now. I really want to say, what I now want to say is that please note that on all of these investments, you need professional guidance. It is very important. You see, you will notice that in picking Dolphin and VGC, those are special developments, special estates, and had we picked other areas at this period, I am not sure the returns would have been this. And this is one thing about investors. Please listen to me. I just wanted to have some in investment. In order to defend value, timing of entry is important. Your entry and exit points ought to be right. And your selection ought to be right. And that is why I want to say, I quickly acknowledge Bengolani and Co. because real estate is not my forte, not my primary forte. Whenever you want to pick long-term investments as a part of your investment strategy, and you want the kind of returns which are comparable with the kind of risks you want to take, you need professional guidance. In 2020, with professional guidance, some people felt that it was not likely that the market will remain as low as it did. So in 2020, when markets crashed with COVID, there are people who bought at the trough and made a lot of money. Some professional people are starting to say, now that there is threat of nuclear war, that if there's any market that crashes precipitously because of nuclear threat, that buy. And this is the logic. They said that if the nuclear threat does not happen, the thing will go back up. If it happens, all of us will be dead. You won't need the money again. So, but the point to make is that you need professional guidance. You don't get the impression that with a presentation like this, one can then just go on and take a blind dive based on what has been said. Let me just quickly run through the rest of my slides, and we can take questions. Now, there is something here on this slide about solutions to strengthen and expand the middle class. And I just want to mention that on the CBN website, as at September 2019, that's the latest data that is on their website, private sector demand deposits in deposit money banks was 5.9 trillion. Saving deposits was 5.2 trillion. Time deposits about the same. It is important to start to think of the best ways that some portions of the financial commonwealth of the country can be used to strengthen and expand the middle class. That's something that we are very big on where I work, and we've been working on, and we hope we'll get to some results very soon. Now, lastly, I've mentioned 5 things. I mentioned mutual funds. I mentioned independently managed portfolio. I mentioned the importance of some currency diversification if you can have access to foreign currency resources. I've mentioned real estate. I've mentioned strengthening and expanding the middle class. The last I must mention is that it's time for us to change the narrative. This picture of profligacy is because the generation of those of us born from 1950 to 1969, we've got the best from this country. Mr. Ojo, I'm sorry if I'm converting your platform to a soapbox. I am not interested in contesting for any office. But we're a generation that has failed woefully in managing the politics of the country to ensure that the country is run by its best. And the story should now be beyond saying that we should go and collect our PVC. We should collect our PVC, but we should get involved in determining who we vote for. There is no point in staying outside of political parties and being limited in the kind of options that they provide for us. We must get involved in politics. This fighting against profligacy, the race against profligacy is a treadmill. It is working so hard to remain on the same spot, as many of you must have seen. We cannot and we shouldn't continue to engage in the luxury of saying it is enough to collect PVC, but still that we do not vote. We must not only vote, we must determine who we vote for. We must get involved in the political parties. And by getting involved in the political parties, we determine at the primaries the kind of candidates we want to vote for. Somebody cracked the joke, one of them politicians. He said it's not the most beautiful girls that win the most beautiful girls pageant on campuses. He said it is those who present themselves for the competition. So if we do not get involved in selecting candidates, this profligate picture will not change. As somebody who fears God, I have decided on my own. I am not interested in contesting for office. But whatever I can do in my own little closet to say I did my best, I intend to do that. Because some people pay me, Mr. Ojo, and they do some of the work for what I present, I just want to mention that I work for Growth and Development Limited. We have 3 licenses in asset management, stockbroking, and lending. Our vision is to create wealth and transform society. We are working very hard to provide unique financial solutions to strengthen the middle class. We expect that before the end of this year, we'll come up with a savings product focused on home ownership in a very unique, low-cost, low-interest way, because we really believe in growing the middle class. These core values, integrity, audacity, result orientation, innovation, we live our core values. We don't pay, we don't take, we rather walk away. We believe that Nigeria cannot develop if we don't conquer corruption. Thank you very much. I will stop here, and if there are questions, we can take questions. Thank you very much, Mr. Tunde Ojo.
Thank you very much, Mr. Kola Ayeye. I mean, once again, it's very clear to me that you are one of our best thought leaders. This is probably your 3rd time of being a member of this faculty, of being invited. This is an excellent presentation. I mean, you loaded with data, evidence-based presentation. We can thank you on behalf of the entire team of 80 people here, 80 participants of distinguished Nigerians. I can tell you, some of them in diaspora, joining us from across the Atlantic. I want to say a big thank you for earning your name again as a thought leader, that we have a lot of respect. I mean, and don't take my word for it. One of the comments that we have here is by the former central bank deputy governor, Mr. Tunde Lemon, is on this platform. It's an excellent, frank, and lucid presentation by one of our best and brightest. Well done, Kola Ayeye. I think that is a better way to say it. We are going to go. I'm not going to recap. If you're joining us late, part of the discipline of this platform is, the management of time. Thank you. I can't thank you enough. I mean, the chat room is our boss, and we have quite a lot of questions. And I think Mr. Tunde Lemon also raised his hand at a particular time. I hope we'll be able to give him that opportunity and privilege. Now, the first question is, well put together presentation, sir. Please, where is the place of cryptocurrency, cryptocurrency and currency diversification. You didn't mention that. So that's the first one. The second one came from Mr. Tunde Lemo, a commendation. So Tosin Oluyemi is saying, thank you for this presentation, sir. What would be your advice regarding the option of investing in UK or US mutual funds, ETFs? Would you, let me get that right. Will you recommend investing in cryptocurrencies as an option? If no, why? All right. Please, Adele, can you mute your, please, can you mute here? Thank you very much. You know, I don't know whether, and then, you know, from our team in Touchstone, this is excellent to everyone. Thank you very much. So you probably want to address these questions before we move on, and we'll give Mr. Tunde Lemo the opportunity of his intervention. There is also,
thank you very much.
Another person who is also raising up his hand. We get as we go. Thank you. 80 thought leaders, 80 Nigerians, both within and in diaspora, join us for this conversation. This is to say how important, these are people of note. They're not just, you know, men and women on the street. Thank you for this robust conversation. Yes, Mr. Ayeye, over to you.
Okay. I may disappoint you regarding cryptocurrency and Bitcoin.
Go ahead.
I don't get involved in what I don't understand. I don't understand how the cryptocurrency and the Bitcoin market work. I have asked questions. I have not gotten sufficient explanations. It does not mean it doesn't work well. It does not mean it's not nice. The trends over a long period has been high, but it's a fairly volatile market. My attitude, and it's conservative, that people who have made a lot of money from it, my attitude has always been, when returns on any instrument appears speculative, very, very high, excessive, I'm normally very guarded. You know, so I'm sorry to disappoint you. I'm not the best person to advise you on crypto or Bitcoin, those new instruments. I don't understand them. Their volatility, you know, they are very volatile instruments. They can be very much up today, down tomorrow. That's for me. I don't think when you want to defend the value of your investments over a long period, you need to be very careful about speculative opportunities. So, I mean, I'm not the best person to advise you. I've just told you the reason why I don't invest in cryptocurrencies or Bitcoin, you know. I think
before you go to the next one, does that not agree with your principle, which is basic principle of investment, that if the risk is high, the return is also very high? So, I mean, does that take away from the fact that it may be high risk and the return is also high risk, you know?
The question is, whenever returns are high, the risk is likely high. But when returns are excessive, the risk is no longer high, it is speculative. There's a difference between high risk and speculative risk. I do not think, I personally, and I must speak for myself as a person, I'm always loath to take speculative risks. And then if people must take speculative risk, they should only pledge a part of their portfolio they are willing to lose. That if this gets lost, I can live with it. I'll give you an example. I don't know what is driving the current valuation of some of the stocks that we have in the tech space. And if you look at the last 30 years, you see what happens in the investment world is that until the international order changes, America is the custodian of the savings of the entire world. China probably has 3 to 4 trillion in reserves. Maybe more than half of it is in America. Now, what you observe is that over the last 30, 40 years, almost every 10, 15 years, there is what is called an asset bubble. Interest just develops in one particular asset class, and people start to pack money into that asset class, and the price of that asset class grows astronomically, not in any relation to the fundamentals or the income from that asset class. Now, if you get in and get out on time, but what usually happens is that there comes a time where that bubble bursts. So, for example, we had the dot-com bubble, where people just write a sheet of paper and they say this is a dot-com company, and the thing will have a $10 million valuation, $30 million valuation, $50 million valuation. What happened to the dot-com bubble? It burst. Then we had the savings and loan bubble. It burst. Then in 2007, we had the real estate bubble. I do hope that a segment of the market, which is adding a lot of value because fintech is democratizing access to financial services. It is making it possible for otherwise sole location organizations such as mine. For example, we have a fintech team to be able to distribute our services beyond the limitations of physical locations. But when you start to see valuations that have absolutely no relation to incomes of the underlying entities, that's what you call a price bubble. And it's only a question of time. You see, what happens in America is that there is huge capital that is looking for who will use it. And these bubbles will happen every 1 in 15 years. So I'm not the best person to advise on crypto. I don't have 1 cent in crypto. I don't have 1 cent in Bitcoin. If I were to put money in crypto and Bitcoin today, I will put money there that if it got lost, I will shrug and say, well, I knew it could get lost. And if it becomes twice or 3 times its value, I will take away my principal, take away 100% of the return, and leave the other 1/3 there, knowing that I am ahead. Whenever that one continues to blow up, I say, fine. If it gets lost, I will say I'm ahead of the clock. But as of today, I don't have investment there. Now, on mutual funds, it's one of the ways to get involved in foreign markets, but do it with advice so that you don't enter when the market is at peak.
Just as it's coming.
The exchange traded fund, whether it is I'm geography agnostic, whether it is Europe or whether it's the London FTSE or the US S&P, But what that does for you is that it insulates you from the sophistication of specific peaks. But make sure that it is money that you are willing to leave for a long time. I would much rather recommend that than Bitcoin or investment. As you can see, that I'm a conservative person. I hope I've attempted to answer those 2 questions, sir.
Thank you very much. I mean, great. We have, before we open up the space for intervention, we have Mr. Kola Ayeye, and that name seems connected to you. Are you
Well, he's one of my bosses.
Oh my God. Is it not ironic to say that you are not interested in elective office yet? Yet the generation you refer to that fail us because they didn't get involved. Please help me understand why you are not interested in getting involved. Great presentation, sir. That's from Mr. Kola Ayeye.
Okay.
And then Oluwatosin Adele says, thank you very much for your time, Mr. Kola Ayeye. This session is value packed. That's on a note of commendation. But I think he got back and said, please, sir, please very much interested in the low-cost housing scheme. Kindly make it open to us when it's in fruition. But I think he said something like he was actually recommending the work on the works of some other people in the real estate market. So do you want to respond? Is it because a whole lot of people are playing the ostrich when it comes to politics as it relates to the very other aspect of our lives, whether business or even, politics has become an existential problem or issue not only in Nigeria, but around the world. So this question, can you address it head on? And then Mr. Atundelema Shuve ready to make its intervention. Thank you.
Sir, just out of, there is a Mr. LT that is raising his hand that you wanted to call. His hand is still up.
That's right, but it will have to come after me, sir, because
okay.
I am here. Mr. Ojo, if I could just quickly dash in, because the last time I raised my hand and I didn't have the opportunity. My name is Dr. Emopai. Thank you so much for, thank you so much for this presentation, particularly in the area of real estate. I was really, really blessed to know that today maybe it's better to begin to invest in Surulere area than going to the island. You know, that is really beautiful, and I will seek more knowledge in that area. There are about 2 or 3 areas I thought you would have mentioned, you would have spoken on to help us. Okay, and how we can optimize return based on balancing, you know, high risk, low risk startups in terms of portfolio investment. I thought you would have spoken a little more on that area based on risk profiling as well as risk appetite of whoever wants to do investment. There's this other one also that has to do with even when you don't have much to really invest, how to ensure your own income. Should you fall sick or something, and an income insurance that is denominated in, you know, some of these currencies that are a lot more stable, in dollars, in pounds. Because I had to, at a time, actually insure myself in pounds, at one time in dollars, just that if my own income was to drop for a whole year, I get my income paid to me for that whole year in pounds or in dollars. So I just thought that some of these areas will appeal to across, because I was looking across all of us who are here, and I believe that some of us can benefit from you throwing more light on those areas. Thank you.
Thank you, Dr. Emopai. I mean, Dr. Emopai is, you know, one of our distinguished faculty members, a man who for 3 or 4 sessions spoke on organizational resilience, and we're yet to get over that. If you want to find that, it's on YouTube. Fantastic session. Thank you, Dr. Emopai. It's just that LT is not spelling exactly. That's actually sounds like. Are you using Madam's platform or somebody else?
No, that's my title, lead teacher. I'm lead teacher in a job.
Okay, that's right. That's right. Thank you for your intervention. Okay. Thank you, sir.
Please let me plead. I want to plead with the 84 people or so on this platform. And I'm going to be brutally frank. I grew up in Oshodi. That's a rough suburb of Lagos. I went to an elite secondary school, Government College Ibadan, solely by passing the common entrance exam. In that school, I rubbed shoulders with the sons of the highest people in bureaucracy and the richest people in the country. In that school, the son of our school driver, who passed the common entrance, was my classmate. But the son of the Secretary General of OPEC was also a student. Today, it's no longer possible for my driver's son and my son to be in the same school, except I give him a scholarship. I went to University of Nigeria, where Mr. Lansing was 3 years ahead of me. When I finished my accounting course, I was certain I could hold my own with any accounting graduate from anywhere in the world. My father, in fact, said he could afford for us to do a master's program abroad, since that is short. I told him I would rather do a master's program in Unilag. In my mind, I didn't need to go abroad except I wanted to do a doctorate, because I thought that a master's program in Unilag was as good as a master's program anywhere. That is the Nigeria that those of us born from 1950 to 1969 grew up in, where social mobility was possible. Now, right before our eyes, we've allowed the country to be damaged. Our children are either on the way out or staying out. I'm no longer burying my head in the sand. I have just opted not to contest for elective office, but I'm going to be active in politics. I am actively working towards the emergence of another political party. And the reason why I have not joined some of the alternative forces is that whenever I see people who start the conversation with they want to be president or vice president, they have damaged the conversation. This is not about who we hold what position. This is about we need to salvage this country. We need to. And for those of us who are Muslims on this platform and those who are Christians, it is a disservice to our faith. Because what is going on in Nigeria is antithetical to the tenets of those faiths. Tunde is my younger brother, by the way, and there are only two of us, so he keeps asking me, why won't you run for? I have absolutely nothing against running for office, but I think it just fouls up the conversation. I think there needs to be a number of people who say it is not about who runs. It is first of all, let us create a platform that can recruit the best. And that is why, for example, some people say we need to borrow a bit from the Chinese model that says before we vote for a few, we must screen and come up with the best. So I want to plead with everybody here. It is fraud when they say we should just go and collect our PVC. That limits us to the options they present to us. And the reason why some of the worst people are bestriding the space with such impunity, given what their track record is because they don't see any way that we have not created a platform that is an alternative. So they feel that we are stuck. God isn't going to come down. It has come down through us, people who can organize this kind of forum. We must get our hands dirty. We must get involved in retail politics. Politics is not by Zoom. Some of us must fold our hands and ensure that some of the best people are available. So I don't have anything against running for office. I don't have anything against, but I just feel that my role is to ensure that the kind of 80 people I see here realize that it's not enough to get PVC. When we get PVC, it is those that the current people present to us that we have to choose from. So that's it about I hope that answers that. And thank you very much, Doctor. On the housing scheme, let me warn again that please don't go away from a session like this and say we should invest in Surulere or we should invest in Ogba or we should invest in. These are important guides. Please, before you take investment decisions, get professional guidance. Are you investing for rental income or are you investing for capital appreciation? Or is it better for you to invest in a development that will turn around in 12 to 24 months? Those things need professional guidance. Please, investing to hedge against profligacy is long-term investment. It needs professional guidance. Thank you very much, Dr. Emokpai. Yes, you're very right, sir. Some content on risk profiling, on asset allocation, on balancing will have been useful. Perhaps because 1 hour 35 minutes, which I stretch to almost 45 to do this, there are 1 or 2 omissions, and I do take that in very, very good stead, sir. I think that income insurance is valuable, but I'm not sure it quite sits within the context of today's topic, which is, investment imperatives of official profligacy. If we stretch it, it could, But I guess some of us have taken the lessons, and I will encourage people who need more guidance to reach Dr. Emokpai if also hedging your income against the risks, not essentially only the risk of profligacy, but the risk of loss of income. If insuring it is something that you need to address, I would say you should. Mr. Ojo, I think I've addressed the question.
Yeah, great. Mr. Tunde Level.
Thank you very much, Mr. Tunde Ojo, for yet another opportunity.
Thank you, sir.
And like I said earlier, Kola has really hit the nail on the head. The presentation is spot on and very excellent. And of course, while he was going through his presentation, I was agonizing that why will the fiscal and monetary policies be conducted in such a way that Nigerians who are very diligent will be unable to increase their wealth. It is like time after time, we are being wiped out. And of course, this narrows the opportunities to exactly what he said, except of course, you want to do currency substitution and invest in foreign currency denominated instruments, which of course you can do through mutual funds, since you may not have the volume and sophistication. The only thing I need to add is that while doing that, you need to be very careful because the foreign exchange rules are such that I don't know if you will not be breaking any rule for you to be able to do that, which was why he said, well, he used some careful words that some of us are like the proverbial ostrich, we bury our heads in the sand. In other words, for us to be able to do that, we just must be prepared to break some laws. But these are laws that are unfair anyway. Finally, I would like to also comment a bit on the comment on office space on the island and the mainland. What you see, particularly in the high-end office space, there are a combination of two things. One is the correction. Since they were quoted in dollars, and as Naira was devaluing, of course, it was necessary to soften the rates. If you look at others that are quoted in Naira, they will be at worst flat. And of course, COVID also had split the market between residential quarters and office space. COVID has made all of us to realize that we don't need half as much space as we had for office, but the home spaces remain the same, which is why you see some divergence in the two. And finally, he made reference to the yield in the Nigerian Stock Exchange over years. But we need to punctuate that a bit with the fact that the growth that we see is even a bit exaggerated because many more shares were added on. So the denominator in those time series were not essentially the same. So it's not as robust as even what he said, but it does not affect his conclusion. Once again, Kola, you've done us proud. Well done. Thank you.
Thank you, sir. Thank you very much, sir.
Thank you, Mr. Lemon, for your intervention. Professor Mrs. Kemi Lansing, very brilliant presentation. Thank you very much, Brother Kola. This is also to note that we're on YouTube, just in case you want to make reference to it later. Somebody said, address the place of Bitcoin too. You have answered that. Also, well done, Pastor Kola Ayeye. Somebody is clearly telling us that you are bivocational. Some of us know that, and you are very, very passionate about what is that. Now, let me ask a question. Is it not too late for us? People have said it's not about the big man, it's about the structure. Can we make can 2023 yield anything if this country is not restructured? And I'm not talking about the politics of it. Is it a question of who occupies the office in Aso Rock, or is a function of the structure of the systemic problem that we have? You may want to, take a look at that very quickly while I also check some of the comments right in the chat room. Generational investment gaps and something. That's Dr. Tony Alabi. He didn't complete that. What is your forecast on the value of the Naira in the next 5 or 10 years? That's Mr. Kende Lansing. I don't know whether that's a fair question to ask you because the former deputy governor of Central Bank is here, and a whole lot of other big juggernaut. Even he himself, we should be asking him that kind of question. But since he has asked, it's over to you. Thank you.
Thank you very much. In the context of the albatross that we call this constitution, there is one state that I think has been very fortunate, and that state is Anambra State. It has moved from Peter Obi, who had a sterling run, to his successor, who at the worst has performed averagely well, and is handing over to an accomplished governor of CBN for whom there are high expectations. I don't think we can fold our hands because of this constitution. If we do not flood office in significant numbers, we can't change the constitution. what it takes to change this constitution is for a leadership to emerge that has sufficient leverage in at least 24 states and at least 2/3 of both houses of legislature. That may not happen in 2023, but it should start. I think our expectations for 2023 should be realistic. And that's why, if you saw in the slide, I said 2023, 2027, and 2031. If we are going to succeed in 2031, we should start now.
That's right.
If all we win in 2023 is one state or 10 seats, it's what we want to do is shake the table so that they will know that there is capacity. We don't want, I fear that if this hopelessness goes beyond 2023 without any ray of hope, I don't know what it could result in. And we're dealing with very wicked people. And since you have mentioned that I'm a pastor, there is a certain principle about wicked leaders that from a million miles away, they see a potential that can change them. That is why they said they should go and kill sons in Egypt. The same thing they repeated when Jesus was born. And that is what we saw at the Lekki Gate. You see that they don't come and shoot those of us who are making noise on Zoom. We are no threat. But the moment they saw those young people collaborating in a way that was unprecedented, they went and killed them because they could see change coming. This change isn't going to happen easy. So what can happen in 2023 if let's start? Let us just start. I am determined not to join the existing morass. That's why I'm working hard for the emergence of a platform that is peopled by selfless people who are committed to principle. As soon as that happens, I will be among those announcing and making noise about it. So, Pastor Tunde, what I'm actually saying is that let us start. And then, to use the Yoruba phrase, atolong. What if we throw our hat in the ring and we say we just wanted to shake the table a little and God overturns the table? David, Goliath, he took the battle. Our battle is even almost worse than David's stones and sling against Goliath. But if David didn't throw the stone, there was no chance for Goliath to fall. If our own is a quarter of a stone, let us throw it. And let us see what God will do with it against this gargantuan evil Goliath who have impoverished us. So that's what I would say about 2023. Only my big brother, Brother Ken Delawansi and Brother Tunde Lemo, will tell us what the exchange rate will be in 10 years. It's above my pay grade. It's above my pay grade, and I am I know my class. It's above my pay grade, sir.
So over to the two of you. I mean, one was former executive director of First Bank. It's hardly better than that. And another was former deputy governor of Central Bank. So between both of you, can you tell us what the exchange rate is likely going to look like? And then we start.
Can we move on? Nobody has a crystal ball to say that in Nigeria, where rascality reigns. And do you really know? Do you really know how much they will borrow next year? Mr. President submitted a paper that he will borrow 6 trillion when he thought he would be able to remove subsidy. That 6 trillion has become 9 trillion. And so you really, really don't know. And the truth is that in Nigeria, the longest term is probably 6 weeks to where you are. So please, let's forget about it. It's like chasing the wild goose.
Wow. Thank you for your response. Mr. Lansing, say something. You are the one who threw this stone into the stream.
No, I'm taking on board the responses. Thank you very much.
Thank you. This is from Mr. Wumi Adeni. Thanks very much, my dear brother, Pastor Kola. This is one of the best factual presentations I've had in a while, with all the compounded problems of debt accumulation. What will be your recommendation for a way forward for a serious government who wants real change in the Nigerian story? Hello. Hello.
Okay. Yes, he's muted himself.
For you, Mr. Adeniyi, or you want to say it? Yeah, just that we have just a couple of minutes to the end. Go ahead.
I think he's put his hands down now.
Oh, okay, great.
I want to refer us to something which the then Secretary of State of the United States, I forget his name now. Yeah, I think it's John Kerry, said on record. In fact, I have that recording on my desktop on this laptop. He said that the American government found $9 billion. He said this in 2015 in the accounts of people. And these $9 billion were diversions for the defense and war budgets. I think that when a government comes in place and it sees this kind of huge debt, we will find, one of the first tasks will be to find the money to press down the debt. I will not say more than that, but that money can be found.
Thank you very much. I want to say a huge thank you for all the distinguished men and women that have joined us for this all-important conversation. I gained helpful insight, powerful insights into investment. And I know that this is a message that is very helpful, useful for a Nigeria that is undergoing, what experts call VUCA, complexity, uncertainties, and all, what have you. Thank you very much for coming along. Once again, I want to say a huge thank you to Mr. Kola Ayeye for providing us with such huge and great insights that against the background of profligacy, we can still make investments and don't just throw up our hands and say, Nigeria is going nowhere. So why should anybody do investment? We need to continue to applaud. And he also has a message of hope, very, very powerful message that we must dirty our hands, not just be on Zoom, collect our PVC, and try and see whether we can roll our sleeves, get involved in the selection of the candidates that we want to vote for. On this note, I want to say a huge thank you. If I start mentioning names, we won't finish here. But I can tell you there are finance experts here, that are experts and investors, entrepreneurs, professionals in oil and gas, lawyers, distinguished SANs. We have professors, people from different strata of society, thought leaders, entrepreneurs, great minds. Thank you for making this a useful conversation. We're going to come your way again in another 2 weeks when we'll be looking at another subject of importance, and we'll be engaging with another distinguished speaker. This has been Touchstone Business Sustainability, and I'm very grateful for my colleagues, Muyiwa Alabi, Dikwo Ogundipe, Buki Oluyemi, and the rest of the team. Until once again, we come your way in the next 2 weeks, I want to say a big thank you for making this conversation a very helpful one. I want to say thank you and enjoy the rest of your weekend. God bless you. Thank you. Bye for now.
Razunde, there is a question you did not allow the speaker to attend to. That question is still on the chat box.
I'm sorry, you can't take all the questions. I wish you could take all the questions.
Okay. Now, it's what I've done here. Thank you very large. Thank you very large. It's been wonderful.
Thank you very much. It's been a great honor to be here, and I really congratulate Touchstone. Thank you all. I'm really humbled and honored. Thank you very much, Saz and Mas.
Okay, so now